let's address another set of numbers. We have with us Mr. Bhansali joining in on the show right now from Emami Limited to talk about their quarterly performance. Mr. Bhansali, good morning. Good to have you on the show. Mr. Bhansali, many FMCG companies have highlighted the slowdown which one is witnessing in the rural end of the economy. Given that 40 to 50% of your revenue pie actually comes from the rural segment, help us understand what really is the reality on ground.
Yeah, there has been some slowdown on the rural side as well. While the modern trade, e-commerce, these are growing very aggressively during this time itself. But these are mainly two reasons. One is also because there was a high last year's base. And intermittent COVID disruptions during this quarter has also impacted. I think with the impetus which has been given in the budget and with the execution of the steps which have been announced, this is expected to ramp up in the near to medium term future.
Okay, and would you say that that's the reason why one has seen a decline specifically in your healthcare as well as male grooming segment?
Yeah, while these are the significant reasons.
Fair point, I understand that. The other thing I wanted to talk about, besides the slowdown in rural demand, is also raw material cost price pressures. How is it that you're mitigating the same? And how is it that you'll manage to maintain your margins then, at the same time perhaps push price hikes onto consumers too?
Yeah. See, costs for us, for all, and for us also it has increased. The costs have increased by 300 basis points, which is very substantial. And that was led by the crude derivatives, vegetable oils, and packaging materials. But despite this, we have been able to maintain our EBITDA, though the margin has dipped only by 130 basis points on my margins. But despite this, we have been able to maintain the EBITDA. We have done 2-3 things. We have done very judicious price increases. We have not gone for an aggressive price increase, and the routine price increases only we have implemented. And also we have taken, as we used to do earlier as well, very strict cost control initiatives that keeps on continuing. And this both the initiatives has helped us contain our EBITDA margins reduction, and we have been able to maintain the EBITDA. So in fact, our EBITDA margins probably are the highest among the peers of above 30% margin. So that's something very, very nice for us.
Good morning. I know my colleague asked you about rural, but I'd like to focus on that a little more. We've heard from the giant Hindustan Unilever, for example, despite reporting 25% margins, flagging off rural degrowth. At a time when Mengai is here, costs are going up. Have you been able to pass on the higher cost to your consumers? Are you seeing any kind of a slowdown? If you can tell us more in detail.
Yeah, while there has been a downtrading also, there has been an impact of the inflation among the normal consumers, and this has impacted the offtakes in the rural and across. But as I said, there was a last year's high base also during this period, and with the actions which are expected to be taken, we expect that over a medium-term period, this will come on the path, right? And on the cost. We do not expect this cost pressure to remain so aggressive going forward. It has to cool down in the fourth quarter in the times to come. So we expect this to get normalized over 3 to 6 months.
Three to 6 months, you expect it to get normalized. And have you raised prices? Are you going to have to do more price rises? Or are you thinking that because it will get normalized in a few months, you're going to wait?
We are not very aggressive on price increases as few of the players have done. We are very judicious in doing the price increases. Our average price increases are in the range of 3 to 4% on a yearly basis. So we would continue with this unless, and we do not expect further spikes to come. And so we will be very judicious, as I said. And our EBITDA margins and gross margins are also very high. Our gross margins are above 65%.
Can you tell us a little bit, Mr. Bhansali, about what your upcoming launches are? You're saying you don't want to be aggressive on price rises. So are you just going to focus on the current portfolio, what you have on the table?
So while we are focusing on the current portfolio, because of almost all our power brands, we have a leadership positions, and with market shares in above 60% in those niche categories, kind of be it Bora Plus or Navratna or Balms or even the Fair and Handsome or oils. So we have a very substantial market share, and we are coming out, while we are growing them aggressively, we are also coming out with relevant extensions in the relevant segments. Even in the new e-commerce and digital platform, we have many new launches which has come up in different price points. And we expect to continue with the new launches and promoting the existing brands both.
Mr. Bhansali, final question. You have also, the board has announced a buyback, right? At a price not exceeding 550 rupees a share. Your current market price is around 500 rupees a share. What's the larger message out?
See, we believe that the price at which the Emami is being traded currently is very, very low, and there is a good opportunity for the company that once it is so we would be buying it from the company, buying it in the company, and those equity will be relinquished. So in a sense, in a way, it would help the company to increase its overall ratios, and also would help the other sellers if they want to sell at a higher price.
And I guess you're thinking of the fair price of 550 rupees a share. That's a 50 rupee pop if you look at the current market price. Mr. Bhansali, it's always a pleasure talking to you. Thank you so much for joining us here. Emami in the news for its results, the buyback, and the headlines that you got there. It should all be normalized in about 6 months when you talk about the inflation or the degrowth that you're seeing in rural India. Unlike its competitors, Emami's decided it's not going to go in for aggressive price rise. Is it going to pay off with higher volumes and sales? Only time will tell.